Assalamualaikum warahmatullahi wabarakatuh. Hello everyone, welcome to our presentation for the Investment and Portfolio Management course. In this video, we will discuss an important topic in finance titled Stock and Bonds. First of all, let me introduce myself. My name is Laura Ramadina and also my teammates Laela Fahmi and Sasongko Bagaskoro. Without any further ado, let's begin the presentation. So, what are shares? Shares are proof of ownership of a company, which is a claim on the income and wealth of the company. So, shares and stocks are actually terms used to describe units of ownership in one of or more companies. The difference is a stock is a broad term for the asset, while a share is the unit of ownership. Next, this is a basic concept of stock. So, um, in this case, Bagas planned to have a food store and need 8 million rupiah in capital, but he only had 1 million rupiah. So he shared offering to his friends. For this reason, so Bagas invited 7 of his friends to jointly invest 1 million each in each person, so that each person in the food store business has shares worth 1 million. And then in the capital market, what Bagas did was to sell food store shares to the general public, which we know as go public. So as we can see, the process starts with the issuer, which is the company that wants to raise funds by selling its shares to the public. In this example, it is illustrated as a fruit store. Next, the company established a listing contract with the Indonesia Stock Exchange or IDX. This means the company is preparing to officially offer its shares in the stock market. After that, the company must get approval from the Financial Services Authority or OJK. This step is important to ensure that the offering follows regulations and is safe for investors. Once approved, the company can proceed to the listing stage, where its securities are officially listed on the stock exchange. Finally, the shares can be purchased by public investors, both domestic and international, including individual and institutional investors. So, in a simple terms, this slide shows the process of how a company sells its shares to the public, which is known as going public or an initial public offering.
I will continue the discussion about basic concept of stock price rise and trading. The Bagas Restore business grew to a value of 16 million. The stock value of Bagas and his friend doubled. And so what it means is this. Imagine if you are a friend of Bagas, you allocate 1 million of your money to Bagas when he need 8 million of capital to build a fruit shop business. It can be said that your 1 million is part of the 8 million money for capital. When Bagas shop business grew and doubled from 8 million to 16 million, then your money will also double from 1 million to 2 million. Because the position here is that you do not give debt to Bagas but become one part of the business owner. When your money has doubled, you can sell some of it to someone else and so on. For the next slide, I will tell about advantage of stock. For the first advantage is affordable. Minimum share purchase is one lot, where one lot is 100 shares. So if there is a share price of one sheet of 500 rupiah, then your minimum purchase is only 15,000. The second advantage is become a company owner. As I said earlier, In stock, you don't give your money as a debt, but as a part owner of the company. The third is net profit growth. When the company performance is good and it's growing, there a chance your money will grow too. The fourth, get dividend. Not only that, you are also have the opportunity to earn dividends. What is dividend? Dividend is net profit. The distribution is also in accordance with the share you have. And the fourth, participate in and vote in the GMS General Meeting Shareholders. This is the highest forum where shareholders exercise their voting right to make important corporate decisions. And the last, capital gain, where the financial gain is derived from the positive difference between the selling price and the buying price. Next, about share price formation factors. In here have two, fundamental analysis and technical analysis. Fundamental analysis based on the company's financial performance. Fundamentals assess a company in strict value or business health for long-term investment, while technical analysis studying stock price movement patterns. Analyze price and volume patterns for short-term trading. In short, fundamental answer what to buy and technical answer when to buy or sell. We move to types of share based on claim right, common shares and common preference. What is different? For the common shares, first, last right of claim when the company experience liquidity. The second, proportional voting right in the GMS. The third, get dividends based on GMS approval. The last, preemptive right, while the common preference, first claim right are prioritized when the company experience liquidity, does not have voting right in the GMS. Third, has the right to receive dividends in a fixed amount every year. The fourth has an option to convert into ordinary shares. And the last, the share code consists of five capital letters, including the code letter P as a sign of preference shares. For example, uh, code, and the last P.
Okay, thank you for Laela and Laura. I will next about this presentation. And the first is what is bond? Medium to long-term transferable debt instrument. Okay, next, the basic concept of the bonds. Contains a promise to pay rewards in the form of interest at a certain period and pay off the principal debt at a specific time to buyers of the bonds. The next is the bonds have two of segment. The first is bond based on issuer. The first is government bonds. Government bonds issued by the government. The second is corporate bonds. Corporate bond issued by private company. Bonds based on the type. Conventional bonds expresses debt from the issuer to the investor, where the issuance does not require underlying asset. The second is Sukuk. Islamic securities is the form of certificates or proof of investor ownership of underlying asset. Okay, so we're going to Sukuk. The use of Sukuk fund is limited to activity in accordance with Sharia principle. Sukuk return is the first is profit sharing, two is fee or ujrah, the third is margin. Sukuk underlying asset. The object that is the basis of the Sukuk insurance transaction as an application of Sharia principle. Tangible, service tangible, beneficial rights to asset, land building and construction project. Listing of the bond and sukuk. Bonds and sukuk must still be listed on the Indonesian Stock Exchange, but transaction can be carried out without going through the stock exchange trading system, which is carried out over the counter. Okay, maybe that's all for our presentation. Maybe if you have any question, you can raise your hand and saying thank you.